LVMH stock drop. How private investors and ownership shape LVMH's future. Last week, LVMH Moët Hennessy Louis Vuitton, Société Européenne, EPAMC, experienced a 3.1% drop, which likely left many private companies with significant stakes in the company feeling quite discontent. Key insights. A notable portion of LVMH's ownership lies with private companies, granting them a powerful voice in the company's management and strategic direction. A duo of investors holds a majority interest, owning a combined 50% of the stock. The percentage of shares held by institutional investors stands at 18%. Source: Simply Wall St. https://simplywallst/stocks/fr/consumer durables/epamc/LVMH Moët Hennessy Louis Vuitton Société Européenne shares/ownership. This could be a turning point for technology as we know it. Explore 20 companies leading the revolution in quantum computing. Source: Simply Wall St. https://simplywall st/discover/investing-ideas/282/quantum-computing-stocks/global. To truly grasp who holds the reins at LVMH Moët Hennessy Louis Vuitton, Société Européenne, EPAMC, it's essential to dive into its ownership landscape. The substantial participation of private companies, which collectively own 49% of the shares, reveals that this group is poised for the most significant potential gains or losses. As the market capitalization dipped to €236 billion last week, those private stakeholders likely bore the brunt of any financial setbacks more than any other groups involved with the firm. Let's examine what the landscape of shareholders reveals about LVMH Moët Hennessy Louis Vuitton, Société Européenne. For in-depth insights, check our latest analysis on LVMH Moët Hennessy Louis Vuitton, Société Européenne. Source: Simply Wall St. https://simplywall st/stocks/fr/consumer-durables/epa-mc/lvmh-moët-hennessy-louis-vuitton-société-européenne-shares. What does institutional ownership reveal? Institutions typically benchmark their stocks against market indicators when presenting data to their investors. Consequently, they often show heightened interest in shares that become part of major indices. Generally, one could expect to see institutional ownership in most developing companies. LVMH Moët Hennessy Louis Vuitton certainly has institutional investors who hold a significant portion of its stock, an indication of its stature among the investment community. However, it's wise to be cautious about the validation that institutional ownership implies, as these entities can misjudge investments just like anyone else. When numerous institutions invest in a single stock, there's a risk of a so-called crowded trade. If such a scenario turns unfavorable, many will scramble to offload their shares, leading to escalating sell-offs. This concern becomes more pronounced when a company lacks a solid growth history. While LVMH Moët Hennessy Louis Vuitton has demonstrated some historical performance, it's essential to acknowledge the broader market context to appreciate its potential accurately. Interestingly, hedge funds have not been heavily invested in LVMH Moët Hennessy Louis Vuitton, with Financière Gage Société Anonyme leading as the largest shareholder, holding a whopping 48% of the shares. The subsequent major shareholders account for approximately 2.5% and 2.1%, respectively, which forms a more detailed picture of ownership concentration in this prestigious firm. Examining institutional ownership can serve as a valuable lens to evaluate a stock's potential trajectory. Likewise, keeping an eye on analyst sentiments can illuminate growth forecasts fairly easily, considering multiple analysts cover this company's stock. Insider ownership. The term insider can be somewhat fluid, but generally those at the board level are viewed as insiders. Ultimately, the management team is accountable to the board, and it's common for executives, especially founders or CEOs, to also hold board positions. Insider ownership typically bodes well, suggesting alignment between the board and shareholders' interests. Nonetheless, it is essential to be mindful of the risks that come with such power being centralized in one group. Current data indicates that insiders own less than 1% of LVMH Moët Hennessy Louis Vuitton. While they might have indirect interests through as yet unexamined corporate structures, it's unlikely for insiders in a large entity to control a significant share. All told, their combined stock ownership amounts to approximately 1.1 billion euros. In this context, it's particularly intriguing to note whether these insiders have been engaging in buying or selling activities. Source: Simply Wall ST, https://mplywall/stocks/fr/consumer durables/epamc/LVMH Moët Hennessy Louis Vuitton Société Européenne shares/ownership. ### General public ownership. The general public, which usually consists of individual investors, holds about 32% of LVMH Moët Hennessy Louis Vuitton. This stake may not provide enough influence to sway company policies substantially, but a collective position of this size can still create an impact on business decisions. ### Private company ownership. Around 49% of LVMH Moët Hennessy Louis Vuitton stock is owned by private companies, which could occasionally be affiliated entities. There are instances when insiders hold interests in public firms through private corporate holdings rather than directly. While generalized conclusions can be tricky here, this factor certainly invites a deeper investigation into ownership structures. ### Next steps. Reflecting on the diverse groups that hold shares in a company opens up several pathways for exploration. Yet, to truly grasp LVMH Moët Hennessy Louis Vuitton's prospects, one must consider a myriad of additional factors. Be mindful that our analysis on LVMH does reveal one potential cautionary sign. Source: Simply Wall ST, https://simplywall st/stock/fr/consumer-durables/epa-mc/lvmh-moët-hennessy-louis-vuitton-société-européenne-shares. Ultimately, looking ahead is key. Check out this free report on analysts' forecasts for the company. Source: Simply Wall ST, https://simplywall st/stock/fr/consumer-durables/epa-mc/lvmh-moët-hennessy-louis-vuitton-société-européenne-shares/future. Disclaimer: the figures presented here derive from data gathered over the last 12 months, encapsulating the period that ends on the last date of the month indicated in the financial statements. This may contrast with full-year annual reporting. New features: AI Stock Screener and Alerts. Our innovative AI Stock Screener works behind the scenes every day to pinpoint investment opportunities. Dividend champions, yielding over 3%. Undervalued small caps with insider purchases. Rapidly growing tech and AI firms. Or customize your own screening approach based on over 50 metrics. Explore now for free. Source: Simply Wall ST, https://simplywall st/features/stock-screener. Your thoughts on this article are welcome. If you have concerns or feedback about the content, please reach out directly. Source: Simply Wall ST, https://investorresearchtypeform.com/to/wvgm Friday #feedback_token=mzkzmdeyntplmtgy WFKYQZOTNJNGUE and company =LVMH%TEMO%C%. Alternatively, you can email the editorial team at editorialteam@simplywallast.com. This article by Simply Wall ST serves a general purpose. We offer insights based solely on historical data and predictive analysis, employing an impartial methodology. Our writings don't constitute investment advice nor endorse buying or selling any specific stocks, and they don't factor in your individual financial goals or circumstances. Our aim is to provide long-term analytical commentary driven by core data. Keep in mind, our evaluations might not capture the latest price-sensitive events or qualitative developments. Simply Wall ST does not hold any positions in the stocks mentioned. Louis Vuitton crisis, luxury downturn and LVMH Q1 2025 results explained. This week, what's going on with Louis Vuitton? Have you noticed the luxury market is facing some serious challenges? The downturn is becoming more pronounced, and industry leader LVMH is anticipated to announce a significant drop in its fashion and leather goods division when it reveals its quarterly sales and first-half profits on July 24th. Is bigger still better? Historically, during economic slowdowns like the 2008 financial crisis or the COVID-19 pandemic, LVMH's immense scale and diverse portfolio across various categories allowed it to weather the storm better than many of its competitors. However, this time around, brands like Richemont, which focuses on jewelry, as well as the standalone powerhouse Hermès, and smaller companies such as Prada, Moncler, Zegna, and Brunello Cucinelli, have shown greater resilience while LVMH seems to be struggling more than ever. One of the main culprits behind this decline is the unjustified price increases, often referred to as greedflation, in the company's crucial handbag segment. Additionally, LVMH is grappling with a generational shift in its leadership. While the company still boasts unmatched marketing budgets and influence with retailers, the rapidly evolving luxury landscape appears to favor more agile companies that can make quick decisions and execute effectively. The upcoming quarters will reveal whether LVMH's current downturn is merely a temporary setback or indicative of a more significant shift in the market. Louis Vuitton under scrutiny. LVMH is encountering difficulties across several key divisions, from job cuts at Moët Hennessy to declining sales at Dior and underwhelming performance at the duty-free retailer DFS. However, with a designer transition in progress at Dior and new management taking charge at Moët, these ongoing changes are increasingly viewed by investors as issues of the past. Revitalizing Louis Vuitton, the group's largest and most lucrative brand, is now a primary concern. The largest luxury brand in the world, which accounts for over half of the group's EBIT, seems to be at a pivotal moment, noted HSBC analyst Erwin Ramborg in a recent client communication. The brand's aspirational image is currently a hindrance. There's a confusing mix of low-end products, like chocolate and beauty items, and high-end exclusive leather collections, along with fashion collaborations, such as with Murakami, and more understated luxury travel items. This raises critical questions. What does Louis Vuitton truly represent? Who is its target audience? What is its unique selling proposition? The establishment of a new deputy CEO role, with former Loro Piana chief Damien Bertrand joining in March to assist CEO Pietro Beccari, has been interpreted as a warning sign regarding the brand's challenges, according to Ramborg, striking a balance between various messages, such as high visibility and sophistication, premium and aspirational pricing, core offerings and brand extensions, has long been part of the mega-brand strategy. However, if LVMH continues to lose market share to competitors like Hermès and Prada, as analysts predict, investors will undoubtedly start to question. What's the plan moving forward? The week ahead is eager to hear your thoughts. Feel free to send tips, suggestions, feedback, or praise to brian.baskin@businessofashion.com. Disclosure: LVMH is among a group of investors that collectively holds a minority stake in the business of fashion. All investors have signed agreements ensuring BOF's complete editorial independence. LVMH earnings preview: what to expect in H1 2025. LVMH expects its results for Q1 2025 to continue showing strong growth, with no recovery or slowdown for luxury players across markets. Analyst Yelena Sokolova highlights that sales fell by 3% year-on-year, including a 5% drop in fashion/leather goods and a 9% decrease in wines/spirits. She emphasizes that these divisions face pressure due to declining sales and operational leverage on fixed costs. In the first quarter of 2025, LVMH reported operating income of €9 billion, down from €10.65 billion in Q1 2024, and net income of €5.9 billion, up from €7.3 billion. Investors will closely monitor the fashion/leather goods division's commercial momentum, which accounted for 48% of 2024 sales and 78% of recurring operating income. However, uncertainties remain around the impact of trade tensions, currency fluctuations, particularly the weakening US dollar, and the evolving consumer behavior in China. The group anticipates that cross-border sales in Japan will outperform mainland China, driven by increased Chinese tourist activity. Wines and spirits face challenges due to trade conflicts between Europe, the US, and China, with LVMH's leading cognac brand, Hennessy, directly linked to global economic uncertainty. Estimated fair value has been reduced to €620 per share from €650, reflecting a more challenging macroeconomic environment. LVMH's pricing power is strong, supported by historical pricing strategies and brand visibility. The company believes its brand-related intangible assets provide a significant moat, with pricing power, conspicuousness, and investment value being key factors. Financial strength is maintained with net debt at 1x EBITDA. Economic growth remains a driver, but structural slowdowns pose risks. Recent growth for Louis Vuitton has been impressive, growing revenue twice as much as historical trends, thanks to favorable demand and brand investments. However, slower overall growth and a fashion cycle could limit future performance. While mergers and acquisitions remain successful, there is still a risk of overpaying or choosing an unviable target. Production and administrative costs are mainly in euros, and invoicing is done in other currencies. Currency adjustments may become more complex as global transparency improves.